Good afternoon, everybody. Welcome to the Trader Merlin Show. A painful Tuesday. Man, completely caught me off guard. Rough day at the end of it. It's funny because when you start off last night, you could see those S&P markets are moving up. NASDAQ was moving up. Everything looked great. Ended with a nice little gap up today. Kept on rallying. It was like, all right, here we go. A little relief rally. And while I didn't think that this rally was going to last, for weeks and weeks, I certainly thought we'd get a couple of days out of it. And lo and behold, no, we couldn't even get 1 day to hold it, which prompted me to create this fantastic AI picture today. Well, I created this a couple days ago, and I showed you it, talked about it already, which was this: the bears are back with a vengeance. I mean, it was a really significant move today. At the end of the day, I'll show you the charts here. Really these last few days have been just colossal movers. Most of them down. Obviously, we had our Monday morning kind of bounce, even though we were down 5.44%, finishing just barely down for the day. It was rough. I will give you the numbers here. At one point today, the S&P was up 4.08%. And you're like, yeah, here we go. Maybe all this fear is a little bit overdone. And then Trump says, hold my beer. Let me put 104% tariff effective at midnight tonight on all the China stuff. And you're like, oh boy, here we go. And then that just started to crush it. I actually tried to play a bounce today and I got smoked on that one. So my long-term holdings got crushed and I took some losses on my futures trade. So it was not a good day. You can see here how it started off. Started off with a nice positive up move. As we came out of the pre-market, sold off just a hair for the opening 15 minutes, 20 minutes, and then started to rally again. I was like, all right, here we go. Going to make some new highs. And then just continued to make lower lows. Unfortunately, I had to jump into class, so I missed. I couldn't sit in front of this and trade this morning, which may have saved me because I probably would have been trying to buy drops in this. I actually was really thinking that we're going to get some pullbacks into demand. I was looking at the closing price of yesterday for the equity markets as kind of that bounce point, which is about 5,300 on the S&P futures. 5,130 on the S&P futures. And as you can tell, it didn't even hesitate at that level, just ripped right through it. So pretty ugly move. And yeah, obviously a pretty painful day, especially because some of my positions had real big down days, especially MicroStrategy and crypto continuing to look really, really ugly. So what does it all boil down to? Well, as we've been saying for the last few days, it's this colossal uncertainty all surrounding tariffs and trade and the tariff war. The question that I think is fueling this is, how do we split up our global relationships? We've had pretty amicable relationships with Europe for as long as I can remember, and the UK. There's this current act of hostility from the United States towards Europe, towards the UK, towards other countries. Does that push all these other countries who are alienating by this tariff talk together, right? Does this push Europe more towards China? Do they say, we're closer to China anyway, we'll just kind of stay over there, and when we were on the continent here, no problem, we'll set up there was a project started years ago, I don't know the status of it, where China was trying to build basically a pan-European shipping routes for trains, real big shipping routes and trade routes throughout Europe. Does this push the EU more towards Europe, or more towards China? I don't know. We'll have to wait and see how it all pans out. The interesting thing is you're having a lot of large, prominent people start to come out against Trump and say, hey, listen, you might want to just slow it down here a little bit. I mean, you slapped on 104% tariff on China goods. I would encourage you that for those of you who are looking to buy something electronic or from China, you probably want to do it today before midnight, and all of a sudden these tariffs start to impact and prices start to rise pretty quickly. So the big fight here is obviously between us and China. That's no surprise. You guys have heard, we've all been talking about it as a group for the past couple of weeks on how this is the biggest one. Yeah, we can bully small countries, we can push them around, that's no problem, but China has the power and the military fight to stand up to us should it get to that. And hopefully it never escalates to those levels, but never rule it out. Never rule it out. So this will probably continue to escalate. If you listen to what Xi Jinping said, he's like, look, we're not backing down for anything. We're not going to back down to your bullying. Matter of fact, we're going to throw some tariffs on you. And now that we do 104% as of tonight at midnight, my assumption would be that China's going to roll out with something more aggressive. And now, I don't know if you guys have ever been around Italians. I will I will explain. I mean, I'm sorry for my Italian friends who are in the room right now. However, in all the time I've lived in Europe, all the time I lived in Italy, let's say that, which was, a solid 5 years, on and off for 7, I never saw an Italian throw a punch. Italians will get in your face and they start yelling at you, and their hand gestures, you're like, they're trying to intimidate you with finger moves or something, but they never actually throw a punch. Meanwhile, if you go to an American bar, you're going to see some Americans fighting pretty much every night at a bar in America. So very different cultures. I feel like what's going on right now with China and the U.S. is a lot of like the Italian fighting hand gestures here. I hope, as well as I'm sure many of you do, that it stays at this level of talk and they resolve it through, heaven forbid, some diplomacy here. If not, it may escalate. I think, and that's the part that the markets are starting to get worried about, is how does this escalate, right? What direction does this go? And to me, that Mark says Sicilians, on the other hand. I still haven't seen a fight in Sicily. Actually, the only fight I saw in Sicily when I was there was actually U.S. Marines fighting each other. It's pretty funny. So, you listen to what Bill Ackman said, and of course, Bill Ackman said looking for a nuclear winter. What I found interesting about these comments from Bill Ackman is they were very quickly dismissed by the National Economic Council Director, Kevin Hassett. He said, listen, calm down. You're out of line with this. I was kind of surprised at these numbers, and I didn't get the chance to verify these, but the National Economic Council guy said only 14% of our GDP is from imports. Like, that's all that's being impacted. I find that hard to believe, but his thinking was that this really wouldn't hurt us that much. I tend to side with Bill Ackman here. I think that the Bill Ackman viewpoint is probably right. In creating all these hostilities amongst other countries, the willingness to cooperate with the United States, even after Trump is out of office, will probably be less, because now we look even more like bullies to the world. So unfortunately, this is not working out for us right now. And ultimately, as you can see here by the moves today, it was pretty ugly. And that was just the S&P. If you look at like the Russell 2000, let's go show you the swing from peak to bottom today. The Russell was brutal. 7.4% move from top to bottom for the Russell 2000, erasing all those great gains in pre-market, just cratering. For those of you who are on the technical side of things, as I am, I'm looking at these lower levels here for the Russell 2000, which are significantly lower. We still got a ways to go to get down to that 1638 level. We're about 130 points away from it right now, but to me, that will probably be where we're headed. You had the NASDAQ as well, showing some significant downside moves today. And I will break. Did we? This is actually, let me real quickly make sure. I want to make sure that this was the bear flag formation numbers here. So for those who are wondering, we have literally hit exactly that bear flag on the NASDAQ 100. So the bear flag that I just measured out, for those of you listening to the podcast, the pole is from February 19th to the bottom on March 11th. It was a pretty sharp move. And then for about 9 days, we kind of slowly traversed up. And then once we break, that's where you put in that measuring object, which is the pole, again, from the break. And that brings us down to a low point of 16,860, with which we hit yesterday. Not a good sign, although that is maybe a good sign for anybody thinking we might bottom out and bounce here. All right, I'm going off in a lot of different directions. Let me read your comments here, because the chat has been good. Big Eb says, could we not see this coming since the China tariffs were a done deal? Yeah, I think yes, we could have seen it coming. Maybe not how quickly it's escalated. And maybe that's shame on me. It was funny because today when those markets were rallying, was getting close to some levels where I was like, you know what? I just want to liquidate all of the positions I have, even though they're at some losses. Like, I think we'll rally up for a couple days. And which may have been the right choice for me to do, would be to liquidate those things. Because the way we closed today, the way the market sentiment just felt all day, God, it feels like we're going much lower, guys. I hate to say it. It feels like we're definitely going to be different lower. So, yes, I think we could have seen this coming, and maybe I was just a little too optimistic that this would have resolved quickly. You guys might remember that on April 2nd, my attitude was that countries were going to come to the table and say, yeah, we'll fix this. We'll remove these tariffs. And, the reality is, why should we even have tariffs? Why? Lisa wants to do that one. Yeah. All right, I'll do a poll for that one. Let me do a poll here real quick. Who will win the tariff war? China? I guess you could put another country on here. And we'll do one more. There you go. So there's your poll. Just have that one out there for fun for you guys. And then let me see what other questions we have here in comments. Well, the affluent Trump supporters are mad about the stock market drop. Yeah, sure. Look, there's not a person alive right now, Andres, who's happy that their portfolio is down 20% in a couple of months. There's no one out there's going, yeah, baby, my portfolio is down. Now, very few people were positioned short. I'm kicking myself because I had short positions and I closed them out at a demand zone, expecting a bounce, which we got, by the way. We got the bounce, and I was waiting for a retracement up to supply to short it again, and I didn't get that bounce that I wanted. So unfortunately, I missed out on that wonderful short move, which I'm kicking myself, but whatever. It's the past. I'll move on and go forward. So yeah, most people, particularly those with 401ks, IRAs, getting smoked. Not a good thing. I do think it'll get resolved within the next few months, but that could be a lot more volatility like we've been experiencing over the next few months. Now, OTA grads better not be. Some will be, VB. Says OTA grads better not be down 20%. Some will be. Some people don't have a plan. Some people don't stick to a plan. Some people are shooting from the hip all the time, no matter how much education you give them. Others are way too skittish to get involved with the markets, and they're being very tentative about it. We'll talk about that here in just a second as a question from Michael G came in and asked about that one. So I brought this chart up again, or this picture up again, which is a mushroom cloud on Financial District with a bunch of financial data, because I do agree with Ackman. If this continues to escalate, I believe that the damage that is going to come from it with regards to relationship with China might be irreparable, at least for several years. But my biggest concern is how does it fragment our alliances as we have today, meaning Mexico, China, Europe, Mexico, Canada, Europe, the UK, other countries, and influence them to go work with China, who's going to give them more better treatment, if you will, than the United States. And that's a tough one. That's a tough one. Chris says, that looks like my portfolio. Yeah, the last couple days, 2 weeks ago, I had a real bad down week. That had followed by a great up week, particularly because I was short. And then, so far, this week has been rough just because of what happened today. I sold some more puts on NVIDIA at the 100 strike, and I was all loving it today. We were at 105, 104, and now came crashing back down. NVIDIA was a wild one today. Our high point on NVIDIA for today's session was 105.85, and we had a low point of 94. That's a 10% swing intraday. It's pretty substantial. Then you had, SMCI, which I'm still in. That was a pretty wild one as well. At one point, that was a great winner. It was up at $34, finishing down at $31.70. And then the brutal one for me, MicroStrategy, was down 11.26%. At one point, it was looking nice, had a nice gain on it, and then just everything just evaporated, which I'm sure most of you experienced. So, the long-term stuff not doing so hot, and the trading today, again, was down for me, but it's all right. Just one day out of many. Now, let's go back to another piece here that I want to get to with regards to the current state of the S&P 500. I've told you many times about my logic behind the 20% pull down, which is why I had the picture of the bear market today. I even tweeted out today. I saw some of you engage with me, so thank you for those that did. I tweeted out about how we might get a breakdown below that 20% mark. And here's here's the post I put. So it looks like today is the day we get a close below that 20% mark, 49.17, official bear market territory by the end of the day, or does the Fed rescue the markets again? And you can see the picture here. When I took this snapshot, man, we were right at it. And it was like, oh boy. And what do you think happened? Like as clockwork, these levels hold, and we had that market bounced off it today. You can see this is the SPY. You can see that tail went right down to that level. I'll go back to the SPX as well so we can look at the index. SPX bounced right off that level as well. Came right down to it. At 49.17 was the low point, or the line there, which is equal to exactly 20%. Our low was 49.10. So we did slightly tip below it 2 days in a row, but we have not closed below it. This is our lowest close, though, that we've had. That is not a good sign. And as I explain in my classes I'll teach at Trading Academy if I ever do core strategy, is this concept of chipping away, where one attack doesn't necessarily erode the entire demand zone or supply zone and take it out. But the more that it attacks something, the more likely it's going to break through. An analogy I always use is a sidewalk, where you got a picture here of a jackhammer, chipping at concrete, and you just don't know how thick that concrete is. And I think my analogy is if you take a jackhammer and you just drop it point first on that concrete, will it break the concrete? Well, I don't know. Probably not. But the more repetition, the more time that bit smacks that concrete with force, it's most likely going to break. And this is what has me pretty nervous right now. If we look at the artwork that I drew for my thoughts on what's going to happen with the S&P, it is choppiness, slight down. Maybe I was being a little bit ambitious for the next few months, but ultimately I do think we're going lower. But I thought we'd slow down here right around that 20% mark, get some stopping, and continue to chop. Well, today's action doesn't really support that argument at all. It's just really no buying sentiment, not holding on to any gains, which leads me to believe we'll probably see more downside movement here. So keep your eyes peeled on that 4,900 level. Get it below that, guys. Then it's the time really to be getting out of positions. Not a good spot to be in. At least what graphs do I use? Yeah, so you can use a bunch of different apps. The ones I'm using are all from Midjourney, which I paid for. It's like $8 a month. I don't mind. Midjourney's is $8 a month. I like Midjourney a lot. If you want free, you can use ChatGPTs for free, and all of a sudden theirs is now getting better, but I use the paid version, which comes up with some pretty nice artwork. And then Grok is also another possibility for artwork for free. What else is it? Listen, I read an interesting statistic today. Since the mid-1960s, every time the market has had back-to-back 5% down days, the Fed has cut by 50 basis points, which is why I brought it up yesterday. Not just that we've had 5% down days, but the aggression of the down days and the fact that we're teetering on this 20%. And that's why I asked you guys yesterday, what do you think we should do? And if I remember correctly, like 70+% of you said we should not cut rates. Right? We should not lower rates. And I'm in that camp. I don't think you should lower rates at all. But it may get to the point of an emergency thing here, whereas the Fed may be pressured by the executive branch to cut rates and say, look, we'll help you down the road get inflation under control. But for right now, you got to stem the bleeding of these equity markets. That's a tough call. Because anyone who knows macroeconomics and the roles of the Fed knows that they should not cut rates now. However, I've seen this before where as an emergency thing they will do to bail out the markets. And we'll see. We'll see how that ends up, what ends up happening this week. It's going to be a wild week, folks. Really tough to trade. What used to look expensive is pretty cheap, but nobody's buying. It's crazy. Yeah. And I wouldn't either. I still have a good amount of dry powder. I'm waiting for lower prices. I told you NVIDIA I like at 100, and I thought we'd bounce this week and stay right around 100, so I was fine with that. If you look at some of the big movers this week, let's go down to our Magnificent Seven, because this to me is the pieces that are going to tell the story. Obviously, if there is a 104% tariff on goods out of China, Apple's screwed. Let's just face it. Apple is already going to be in big trouble. Their profit margins are going to shrink significantly. Tesla, you got for a whole different set of reasons. Tesla coming right back down to that 214 is the line I have on your chart here, which to me is a pretty important level. Although I'm not buying Tesla now, but I can't say it enough. I am very bullish long-term on Tesla, just not now, not at 200. We get down to some of these lower levels we've seen back in 2024. Like, I'd love to be a buyer right around 130. Sign me up. I'll back the truck up at 130. What was your percentage when the circuit breakers activate, Merlin? 7. So, Oliver, it's 7, 13, and 20 are the circuit breakers. 7, 13, and 20. Now, 7, I got to remember, this is a tough one. I actually did a show on this years ago, but I don't remember all the numbers. It's 7%. They stop for 15 minutes. So, during regular market. In the after hour, I believe it's 7% lockdown, and they cannot trade lower than 7% in the after hours. So even if there's a nuclear bomb goes off, they cannot trade lower than 7% on the S&P 500. That will be frozen, which is in 2016 one of the best trades I ever made was, yeah, remember that one, Jeff. 130, I'll back the truck up on Tesla. 130, I'll back the truck up. back in 2016 when Trump first won the election over Hillary, we lock limited down, and I was buying heavy positions because I knew it couldn't go down more than 7%. I was just going to play the little bounces that kept happening. And there was like 8 of them that happened that night. It was insane. We didn't get there, unfortunately. But regular market hours, 7% is your first lock, and it will close the market for 15. Basically, you can't trade for 15 minutes. The next lock is at 13% down, and that's another, I believe, 15-minute break. If it drops to 20% in a day, the market stops. Can't trade the rest of the day. Automatically stop. Okay, those are your circuit breakers. We get 20%. That's we'll see. Let's see. When do you think we can for sure say inflation is a problem? Dwight, that's a great question. In my opinion, and this is just my opinion. Well, actually, let's do polls. I like doing polls. I want to do more polls. All right. So the end of the first poll said who's going to win the trade war. My bet on this one is that the U.S. will win, but it'll be a mutual thing. We'll get concessions either way, but the U.S. will come out and parade victoriously. And let's see, 42% said U.S., 33% said nobody, 24% said China. No one said Europe. Don't rule Europe out as the dark horse here and maybe pushing themselves into a power position because they're kind of that neutral ground. I don't know. We'll see. All right. So the other question was, let's go to another poll here. Have some fun. Why not have some fun for the show? When will inflation hit? I'll put when will inflation surge? How about that? Because it's a little bit different than your question about, when will we know if it's here? Let's just say 1 to 3 months is the first one. We'll go 3 to 6 months. I'll do more than 6 months. Oh, and I'm also going to put here, never. All right, sorry, my typing is bad and the spelling might be incorrect, but trying to do this at the same time. So my poll here is, when will inflation surge? 1 to 3 months? 3 to 6? More than 6 months or never? There's no inflation whatsoever. Remember, these tariffs, which for all intents and purposes went into effect April 2nd, just a few days ago, it will take time to burn through existing inventory, get that inventory onto shelves, and those costs being passed on. So I certainly think it's going to take a little longer than anticipated. I myself, if I had to click the poll, I always like to wait till most of you guys have done the poll here, but we've got over 100 people, so you guys should all be rushing to get your opinion. This isn't a school test. I'm not going to mark an F for failure. Trading's about opinions. It's up to you to put your money where you think it's best appropriately held, so don't think you're going to put a wrong answer. There is no wrong answer for this poll. I tend to agree with the bulk here. I think 3 to 6 months, in my opinion, is when inflation will really start to hit. And what will be good for that is in 3 months, if inflation really does start to hit, then the Fed will know what they can do. If 3 months pass and the inflation is muted, then the Fed may actually start to cut rates. So, if inflation does not rise as most are expecting, then the Fed can start to cut rates. If it does start to raise, meaning inflation is getting higher and higher, then the Fed's caught in a corner. They really can't cut rates. They may be forced to, as Bill Addis suggested, and I think Bill Addis is probably going to be right here. I think so. Moving to the upside, right? That they're going to raise rates. Mark Simmons, I bought toilet paper today. You know what? I've got like 10 rolls left in the house. I'll go buy a 24 pack just to be safe. But it's funny. This is how silly I am. I know that goods and services from China are going to start to cost more and more. And I've always wanted an electronic salt and pepper grinder. And last night I was sitting there, I'm like, you know what? I got to buy that salt and pepper grinder just because I don't want this $19 item to cost me $23 tomorrow, right? I'm too cheap to spend $4 more for it. So I ordered it last night. H Mart charges $14 for eggs. Well, they got to be coming down now. I saw H Mart and some of the other places were super expensive, but eggs are dropping. Here's one my company received today. There is a paper shortage coming, and it will be like COVID times. Interesting. Man, you know what's? It's so crazy, Lisa. Thank you for putting that in there. It's so crazy to think of how all of this impacts everything. I mean, literally everything. Whether I'm fidgeting with the device that I use for my phone to record audio, or I'm looking at pens, or I've got my Ledger or Trezor devices, everything is manufactured somewhere. And depending on the extent of that manufacturing, it could impact us all in profound ways. All right, so our result for the second poll, which when inflation will surge, a majority of you said 3 to 6 months. That was 59% of you. More than 6 months at 18. 6% of you very optimistic. Never. No inflation. Okay, well, we have inflation, but there we go. And then 16% of you said 1 to 3 months. So general consensus is inflation's coming. The severity is unknown at this point. Are we going to get back to those 1980s levels? I don't know. I've never seen anything like this in my entire trading and investing career, where we're slapping on tariffs with such aggression, and I just don't know what that fallout's going to be. So unfortunately, I couldn't tell you. I was not involved with the financial markets back in the 80s. I was alive, but I was not, cognizant of what was happening. I have to ask my parents about that one. We get the Pope to make toilet paper. Oh, great. From Canada. Well, we better make some peace with Canada. Tariff deals will be out by then. Doge will be done by then. Excellent timing. I agree. 3 to 6 months could be when unemployment rises too. Government layoffs. Yeah, Liz, excuse me. Yeah, Liz, I think that's another variable here. Yes, inflation should be increasing. The severity is to be determined, but 3 to 6 months is when we should start to see the tariffs really start to hit bottom line prices. Unemployment, I think 3 to 6 months is certainly a logical time. And if you look at, I don't think I have Forex factory up. Let me really quickly bring it up here. If you look at the current unemployment numbers, sorry, I'm saying way too many times today. What's going on to me? I'm getting old. Here is your unemployment rate, and it's ticked up every quarter, getting a little bit higher. Well, every month. Now, we had a little bit of a drop, but for 3 months in a row, we've gone from 4% to 4.1 to 4.2. The last 2 times, we have exceeded expectation. So that looks pretty bad. Our peak back here in August of 2024 was at 4.3, and we're almost there. After that, you're dealing with levels we haven't seen since 2021. I still am in the camp that says anything under 5%, we're okay. But it's the trend that should be concerning to everyone, that we're slightly starting to increase here. And I think, as Liz points out, I do believe that in the next 3 to 6 months, we're going to see unemployment at 4.5%. In 6 months, I say 4.5% on unemployment, if not higher. I think we'll get a 1/10 of a percentage increase per month going forward. Inflation-wise, let's go back to our core PCE numbers here. Let me just real quickly bring those up. Forget where all this stuff is. There's so many different numbers that come out every week. Let's see, that's your cash rate. We have PPI and CPI numbers this week. Let's go to find the core PCE data real briefly as I knock everybody out here and just put in the US, and we'll look at just inflation and GDP, so we can keep that one in there. All right, so going back into March, our core PCE price index was 0.4, and that was higher than expected. So that's your reading of inflation. But we talked about it really surging in maybe 3 to 6 months, but notice what's happened over the past 4 months. In December, core PCE number was 0.1. January, 0.2. February, 0.3. March, 0.4. I mean, the trend is your friend till the bend at the end. So to me, that would imply that we're going to see 0.5 for our reading in April. That's not going to be a good number if we come out at 0.5. Because remember, 0.5 annualized is 6% inflation. Now, again, that's annualized, which means we'd have to have more months of it, but it's a start. And that trend, as they say, the trend is your friend till the bend at the end. Let me see if I can find our next core PCE numbers. There we go. So Wednesday, April 30th will be the next core PCE numbers that come out. That's going to be an important one. Oh, boy. Oh, the fun with numbers and data, which will drive our markets. I thought some of Nikes. Oh, I bought some Nikes today before the tariff goes into effect. Probably a good idea. Probably good. I wouldn't be surprised if Meta traded back in the 300s. Well, I have heard discussions about the EU playing hardball with America with regards to our services and maybe adding tariffs to services that we're providing, which would change the dynamics of a lot of our relationships with Europe. Now, Meta getting back down to 300, would that create a big buy? I'll be honest, for me, no. I'm not a fan of Meta. I'm not a fan of Meta, unfortunately, but that's just my own personal thing. I know some of you are. That's great. Let's go put a horizontal line on that 300 mark just so we can have a visual reference of it. So we'll go 300. I mean, obviously, if you got to 300, you're talking well over a 50% decline. To get down to that level off the all-time highs would be a 59, almost 60% decline in the price of Meta. So sure, that I think would be a buy. I like companies that actually sell more physical products, like Amazon. Right, Amazon. If you gave me Amazon at a 59% discount, I'm back on the truck up on that one too. That would bring it all the way down sub 100. I would love Amazon sub 100. Oh, please let me have Amazon sub 100. I'm absolutely loading the boat on that one. And that's one. Honestly, if Amazon got to $100, I don't care how long it would stay underwater. It's gonna come back. Amazon's not going anywhere. Then you look at Nvidia. I already mentioned I like NVIDIA at 100, but I'd really love it at 75, which is kind of this low point that goes back into April of 2024. Could it get there? Sure. I think that the volatility on NVIDIA is going to be much higher than it would be for Amazon. Amazon, I think, is a much more diversified product. It's established. It's things we all know and use every single day. NVIDIA is building the future. That's a very different model of PE ratios, of sales, of growth. And if we do get economic contraction and things slow down and tariff wars escalate and Taiwan Semiconductor can no longer sell chips to NVIDIA, NVIDIA could go down a lot more percentage-wise, in my opinion, than Amazon. Colton says NVIDIA is the best tech company in the world. I would agree with that. I would agree with that right now. And as you said, there's no other company that's a good comparison. For now, that's true. For now, there's nobody that even comes close to building the products that NVIDIA does. And the other side of that is NVIDIA. I don't think a lot of people are really aware of this. There are so many companies buying NVIDIA's products that their sales guys and their account representatives are working with those businesses to figure out how they can get NVIDIA's products better suited for that individual business. In doing so, those business relationships are brought back to NVIDIA because NVIDIA now is privy to the potential for new technology of innovation. And what do you think NVIDIA does with that? They buy into those companies. So NVIDIA not only is this epic creator of one of the best products ever for AI, but also can see all the up-and-coming companies and is investing heavily in these companies. It's got a whole portfolio that it's invested in, some that's partially owned, some that it owns outright. So NVIDIA definitely puts itself head and shoulders above. However, Colton, I would say, even though I agree with you 100%, it doesn't mean that they're going to continue to go up, right? If we get an economic contraction and things slow down and there's an issue with chips, remember 90+% of their, I think it was 93 or 97% of the chips for NVIDIA come from Taiwan Semiconductor. We all think Taiwan is independent. The Chinese say that Taiwan is theirs. So if China wants to have an issue with the trade war, they're going to go to Taiwan Semiconductor and they're going to say this. And I did this as a black swan event. let me take one step back. I was asked at an event up in, I think it was Carson. We did a live event with Larry Jacobson and a couple other instructors. It was awesome. And gentleman in the crowd said, what do you think is the next black swan event? Well, the reality is a black swan event, you don't know what it is until it hits. That's what a black swan is. So I stepped back, and I've mentioned this story to you before. I said, if I step back and look big picture, to me, the black swan event would be a World War III type of event. And that would happen because of Taiwan. Because all China has to do is say, Taiwan Semiconductor can no longer send any chips to America. Now, Colton, you may think that NVIDIA is this great behemoth, juggernaut, amazing powerhouse. What do you think would happen to NVIDIA if the Chinese government took over TSM and said, we're not sending one chip to the United States? Your NVIDIA chart is straight down. It could go single digits. They'd have nothing to sell. They'd have no product because their chips are coming from Taiwan Semiconductor. So again, that's an extreme, not to create FUD or panic or whatever, but this trade war is escalating. And it would not surprise me at all to see China do that. It's becoming much more of a reality now that Trump said, hey, 104% tariff on your stuff you're sending us. Okay, we're not going to send you chips. Exactly, Liz. It would crater along with the entire market. It would be really bad. And let's hope. Knock on wood. Knock on wood. Okay, Colton. Taiwan Semiconductor is building new plants in Arizona and other U.S. locations thanks to the CHIPS Act. Might be too little too late, but more plants are being built. That's a real risk, but not a long-term. Correct. Yeah, those plants are not even functional yet, right? So if this happens with Taiwan Semiconductor in the next 3 months, we're going to go into an economic collapse. Too much relies on those chips, man. Taiwan Semiconductor is way too valuable. Let's go TSM. And you can just, this chart's absolutely beautiful. And by the way, you can see the impacts that tariffs might be having on chips. Look at Taiwan Semiconductor. Was up at $230. Now we're at 140. Now $90 per share. This could be a great buy at some point as well. But I would wait till this dust settles, right? Wait till this dust settles. As Colton points out, and yes, you're right, at some point we will get production domestically of those same chips. We won't get them at the same price. They won't be the same price. Cost of labor in Asia is way cheaper than it is in the United States, but at least we have access to the chips, right? But if it happens before those factories go online, guys, that to me is a black swan event. That's your black swan event. We'll see. I hope I'm wrong. Actually, I hope I'm right only when I'm out of all my long positions and I'm short. And I'm not short right now, so. Garfield says, I sold puts on Taiwan Semiconductor for Friday. What strike? You could probably got some amazing premium. That thing's real volatile right now. You know, if you're down in the 125s, it's pretty close, but I like the 125s. 125s, the 130s. Yeah, there you go. 135. You're a little higher up than I would have gone. You're kind of at the money from yesterday. I would have gone a little bit further out just because I'm risk averse. Who provides the automated assembly lines for the chip makers Rockwell? Don't know, VB. Yeah. Andres, let's make iPhones in America. So one of two things would happen there if we did that, Andres. If we made iPhones exclusively in America and made it a 100% American product, the cost of those phones, one of two things have to happen. Number one is the cost is either going to skyrocket because we're getting all these cheap components from China. A lot of it built up, full manufacturing over there. That's way cheaper than here. If we bring it all here, our cost of manufacturing goes much, much higher. Therefore, either the phone costs a lot more money or Apple's profit margins drop significantly because they eat some of that cost. As Tofi says, $3,000 phones. Yeah. It's so funny. You've got people that are living paycheck to paycheck with maxed out credit cards. They can't afford to eat dinner at night, but they got a $1,000 iPhone. Something's wrong there. I walked by a homeless guy yesterday, or 2 days ago. I went to the breweries down here in Costa. It's on Sunday. And there was a homeless guy on an iPhone. Now, you can tell he was homeless. He got a cart, dirty as all heck, but he's on his phone. Where do you get your phone bill at, bud? Anyway. Steven says, Amazon's revenues is literally $800 billion a year with $1.90 per share earnings. Walmart is close, but those earnings per share aren't half. Amazon is juggernaut above everyone else, in my opinion. I agree. And not only that, Steven, for me, Amazon, what they bring to the table is a plethora of different products. It's, yeah, I can shop for groceries. Yes, I can shop for any item in my home. Anything. Like literally anything. If I want to buy a plumbing fixture, a new toilet, a computer, I don't have my camera to spin around over here, but right next to me, so I've got this 3-monitor setup here and a green screen, the whole wall. It's like a 20-foot wall of just green screens. And I got my lights and my cameras and backlights and fill and all that stuff and microphones and all kinds of things here. 6 feet away from me, I've got a podium, I've got a teleprompter, I've got other key lights, another green screen. All that arrived in my house within 24 hours. It was just crazy. Garfield had just ordered Amazon. Paper products from Amazon. So yeah, you can get anything from Amazon, but then you also have the streaming services, you have the media, and there's so much that Amazon does. Look, it's the only company I can think of that I've never actually badmouthed. I've always said buy Amazon. And back in the late 90s, I had it in my portfolio at $40 per share. I was buying a bunch of it, but I was trading it. We're just swapping, 5,000 share blocks at a time. And I wish I just bought 5,000 and held it. Unfortunately, 3 words that don't exist, right? Shoulda, coulda, and woulda. A homeless guy probably swiping and robbing. Probably. When is the tariff actually paid? When it arrives at our shore or when it is sold at the retail spot? So it should be when it arrives at port, right? When it's sold. It's a good question, Mike. Is it done when I make the purchase from China on that transactional end? Because I know Alibaba asked for that. Or is it when it comes to port? Is there an extra fee? That I don't know. Great question, Mike. I'll look into that one. Steven says, I love Amazon. I hate shopping. Yeah. Part of me likes shopping just to see the stupidity and chaos that goes on in stores and just how people are. I mean, the social experiment for, thank you, Judy. It's at port. I thought it would be, there's a value of whatever's in the container and then there's an extra premium. So, cool. Customs clearance. Thanks, guys. Love it. I'll do a deeper dive in that for myself. I'd like to know. Not many plants can manufacture the 2 nanometer. Yep, that's the thing that gives them a huge advantage. And that's why everyone's using them. Everyone's using them. Just got home from a nice walk. Oh, good to see you, Liz. Have an Amazon delivered waiting for me. I have them every day. Salt and pepper shaker from China. I think of the tariff like an import duty. The importer has to pay. Well, it will impact us. So anything coming in now in the last few days is getting tariffs, and then it'll get more and then more. As of midnight tonight, it'd be interesting to see if I went out to the beach tonight to look at the port of Long Beach. I'll bet you that there's some Chinese tankers that are saying, "Hey, we'll pay extra. We'll pay $50,000 to cut in line so we can get our stuff into port before midnight because that's when this is supposed to happen." Are the port workers equipped to handle these kinds of tariffs? I mean, there's no one's handling cash. It's not going to be a cash thing. This is all electronic payments. All right, what else do I have in here? So I want to go to a question. Let me real quickly bring up my email. And again, if you guys email me at tradermerlin@gmail.com, I'm always happy to answer your questions. This one came in from Michael G. I'm sorry, I'm trying to bring it up here, so doing multiple things at the same time. But Michael G. Is a good question. It really is. He says, I'm having a tough time with all this whiplash. How does one swing trade this market as I have an 8 to 4 and cannot pay close attention during the day? I would say suggestion number 1 is to scale back on how much you're trading, right? And I think that many of you probably, maybe not confusion, but just the struggle. And I love how the AI made this chart look like this because that's what it feels like. Huge swing up, huge swing down, huge swing up, huge swing down. I would say that if you're struggling with this and you're a swing trader, someone that's making trades that last days to weeks, you start off with the big picture, which is I'm looking at what the big picture is doing for the market. And that right now is, without exception, is going down, right? So if that's the case, then what I think you need to do, and this isn't just for you, Michael, this is for anyone looking at this, is go back to your S&P. And this is on a daily time frame, but maybe I switch this into an hourly. And you're looking for, key supplier demand zones where you will short this downtrend and hold on to it, right? You're going with a bigger trend here because that's where the momentum is. It's to the downside. So I would say you're looking at a bigger time frame trend, trying to join that trend by using a lower time frame, and not trying to pick bottoms. Picking bottoms is dangerous, and we saw that yesterday. Yesterday was a pretty nice rip to the upside, and all of a sudden we've given it all back. Unfortunately, in these markets, as Jeff puts here, he says you get stopped out. Yes, you do. So part of what you're going to have to do is look at your ATR and figure out how do you adjust your stops. So we can't really see it that clearly. Well, I can see it clearly, but for those podcasters, you can't. If you go back to December of last year, the average daily range price move of the S&P was 42 points, right? By the time we got to January of this year, we were at 103. Right now, as of today, the S&P is moving an average of 167 points a day. That's a 400x increase in ATR. So you have to trade smaller contractor share size, and because the ATRs are so massive, your stop losses have to be bigger. So let's say that you had a 1 ATR stop loss, right? So you got a 40-point stop loss on the S&P. Great. And you're like, okay, I'm trading 400 shares. Actually, I'm trading 400 shares. Now, the ATR is 4 times that. So instead of trading 400 shares, you should be trading 100 shares and have a 160-point stop loss. If you're using calculations like that, just showing how much the ATR has changed, you have to adjust your stop loss. right? If you're using the same stop loss that you were back in December, you're like, oh, I've got a 5-point stop loss. Well, no wonder you're getting ripped out all the time. Markets are dynamic, and that's why I love ADR, ATR, either way, looking at what the volatility is saying. If we zoom out here, we have not seen volatility in these markets at this level since 2020. These are COVID-like moves. So I certainly think you got to scale back on your trade size. If you are someone who's a momentum trader, or actually let's say more of a swing to position, meaning you're buying into something and you're let winners run, then maybe you add 2 winning positions, but you got to have wider stop losses. And generally, I would say it's about being more cautious. I know that we all, including myself, want to catch that 5% swing intraday. We all do. But doing so brings a whole different level of stress to you psychologically, emotionally. I just think it's a bit dangerous. It's really about big picture. I do think that over the next 3 to 6 months, you're going to see these markets trickle down. So you can either start building a bigger short position and just let it trickle down, and don't look at it every day. Don't look at it every 5 minutes, as was posted here in chat. Just let it move to the downside. And once that trend line is broken or it starts to make some new highs, then you exit and go the opposite way. When is Berkshire is moving up? When its top holdings, Apple, Bank of America, and others are down year to date. I have not watched Berkshire. Let's go look at it. Let's go to stocks, and here's Berkshire Hathaway. We'll go the B shares. These are the small ones. I don't know if it's necessarily moving up. It has the same look and feel of the price charts, right? We've had these really big down days, big up day, big down day. I think, if anything, there's an expectation that Berkshire Hathaway is going to benefit significantly from a market dump. So I do believe that in Berkshire, they are pricing in a premium, right? If you've got $300 billion in cash and the market just tanked 20%, you now have more firepower than any other company out there, any other public company, right? So I think what's happening is it's pricing in the fact that at a certain point here, Buffett's going to deploy that capital. I don't think it'll backstop the market, but it certainly could get him better rates of return percentage as opposed to some of these companies that have just been holding on to losing positions. He's in cash, sidestep the down move, jump into lower price. You're going to have a much bigger compounding annual rate of return than anybody else. So I think that's why it doesn't look as bad, but still, same basic price chart. When they buy, we know. Price up year to date, but its holdings are down year to date. Well, maybe not all their holdings. And again, I do think it's pricing in the fact that they have $300 billion in cash. I'd buy them when we find the bottom. Well, if you can, I think Berkshire probably would be a logical buy. But to Ganesh's point, why is price higher when a lot of their holdings are down? Because I think a lot of people are buying into it, knowing that Berkshire has all this money and is ready to deploy it. At some point, he'll be able to buy these bottoms or buy close to the bottom. He doesn't have to buy the bottom. What he will do is he'll just continue to sell massive call or massive put positions, collecting premium, and he'll be making money with premium. So when Ganesh is looking out there saying, oh, well, his holdings are down, remember, he's selling puts. There's companies that he wants to buy. He'll be out there selling thousands and thousands of puts, collecting billions of dollars worth of profit. So it's not... Berkshire Hathaway isn't just the holdings that it has. It's its options business, right? Berk B is the small one. Berk A is the big one. So the Berk A is the $1 million, $700,000 one, right? So that to me is why you're seeing that premium being paid. It's not just that they're holdings. This is not like a mutual fund. This is not a typical business. They make a lot of money selling puts. A lot of money selling puts. Would I buy Netflix? No. No, Andres, I wouldn't. I'm not a fan. I think there's so many other video companies out there. I'm really surprised it went as high as it did. It has a head and shoulders pattern right now. I'm actually more inclined to think of shorting Netflix. I know if we go into a recession, a lot of people are going to stay home and spend less money, but there's a lot of other services out there. You got Hulu and HBO and Paramount and Peacock, all these different services. I think it's just tons and tons of different competition in that space. Not a big fan. I wouldn't. It's not for me. For others, sure, go for it. Let's see what Nancy Pelosi purchased. Yeah, he's running about 300 billion. Isn't that crazy? I want a whole Berker. Yeah. Well, there's only, it's funny when you look at that, when you look at Berkshire Hathaway, there's only a few shares. It's not a few, but there's not like a ton of shares out there. Let me see if I can find the numbers here for you. Oh, it doesn't show me here. If I went to Yahoo, I could find the statistics would show number of outstanding shares. So you could see there's not that many compared to some other companies that have, billions like Apple, etc. Big M says, I would buy Netflix. If you would buy Netflix, buy spot first, fundamental wise. All right. Okay, let me go into economic calendar for mañana. I thought I had it all up here ready to go. Nothing really that big. Obviously, tonight we do have an announcement in a few hours. That's going to be New Zealand coming out with their rate cut. It's going to be 25 basis point cut here. That should happen in what time is it now? It should be coming up here shortly. Why am I on April 29th? Let's go back to April 9th. So that's your rate cut. That's going to happen at 7 p.m. Pacific time, so 10 p.m. Eastern time. And then for tomorrow, from a U.S. perspective, there are some minor announcements. Wholesale inventories. You got crude oil inventories. You've got the 10-year bond auction. I'm curious to see how that one goes. And then you have FOMC meeting minutes will be your last piece. On the earnings front, there's really nothing to talk about on earnings until we get to Friday, which is the big day. So, man, who knows? I have no clue where we're going to end up tomorrow. I actually thought we were going to have kind of a slight up day. At the end of the day, I thought we were going to have like a up 1%, maybe 2% day for the S&P. And here we are, down significantly. We already looked at some of the charts, but I will wrap up with the charts and then we can close up this show here. Boom. Going through our list, top 10, crude oil. That's interesting. I've been cut off. Look at that. I can no longer get data. All my data is gone. Oh, that's financials. I was like, wait a minute, I got cut off. So here's your crude oil. Ugly chart. I don't have anything historically to go back to. Right now we're at $59 on crude oil. We broke this level here, and I've been saying that my bias is to the downside. We talked about this demand zone, or really just this shelf of price between $65 and $67. Well, we broke that, and all of a sudden we find ourselves at $59. Question is, where does it bottom? Right now, for me, that target's going to be $52.75. Rounded up, call it $53. But it's right in the middle of this area of congestion that goes all the way back to 2021. All right, $52. Ouch. Quite a ways to go there. Russell 2000, we talked about that one tanking. You've got a demand zone right around 1,638. 140 points away. Considering we fell 48 points, we got a ways to go to get there. NASDAQ, also pain point, and I got a lot of these lines on here. That is a completion of a bull flag formation. The question is, does this level at 16,810 hold? Time will tell. S&P 500, that was the chipping away analogy I used today. It's hit that low 2 times. 4,926 was exactly 20% below it. Keep your eyes on it, because if we get a close below 29 or 49.26, we are bear market. We are bear market. Bitcoin. Oh, not looking good. Down 1.8%, 76,815, and I've got that line there at 76,394. We've hit it 2 days in a row. Really need to see this thing, stall here and start to move back up, but that chart does not look good. That chart looks like it's going to continue to drift lower. I hate to say it. Shocking this happening, but yeah, it looks like it's wanting to go lower, so we'll see where it ends up here. Dollar index was down 0.5%, nothing technical there, just other than a little bit of a retracement up. Gold getting back a little bit of its 3-day sell-off, up 0.56%, closing at 2,990. And then your best performer, another great day for yields, soaring 2 days in a row, 2.09%, as that risk-off move today caused a lot of people to jump into bonds. All right, go to risk-off and buy bonds. Weren't they calling 70,000? It's you mean on Bitcoin? Some people were. A lot of people were. I didn't. I've been saying, bottom chart there's ADR. You can use ATR, ADR. They're pretty much the same thing. Basically, average daily range. All right, that's going to do it for me, everybody. Hope you enjoyed today's show. Hope stay safe out there. These markets are just incredibly volatile. You never know what Trump's going to say that's going to juice this market up or down. We could come to an agreement, and all of a sudden markets move up 500 points. go down 500 points. Whiplash. So don't get caught with too big of positions. Protect yourself if you can, and I will see you guys on tomorrow's show. If there's something that you want me to talk about, email me, tradermerlin@gmail.com. Yeah, I'm going to be on, I don't know whether I'm going to be on Don Fran's show or he's going to be on my show, but yeah, we're going to do a show together on Friday, so I'll reach out to him today. Yeah. And then at 11 o'clock on Friday will be that event for Trading Academy. That's going to be Larry Jacobson, Bill Addis, and myself, so it should be a pretty exciting week. All right, guys, that's going to do it. Have a fantastic remainder of your day. I will see you mañana.